Hello, and welcome to Own Your Retirement. My name is Albert Lalonde from Kaizen Financial. If you'd like more information about what you hear during our show today, give us a call at 586-752-7008 or visit us online at www.kaizenfinancialgroup.com. That's Kaizen, Kaizen. And while on my website, click on the podcast page to check out our past shows and also to subscribe to our program on Apple Podcasts, Spotify, or Amazon Music. Okay, think back to perhaps the summer of 2024. It doesn't seem too long ago. And the market and the broader economy were stable. And because of that, you decided that you're officially retired at some point in 2025. But now here we are in the first half of 2025. The market and the broader economy were stable. And all of a sudden, we're hearing these dominated news of tariffs, and the market has cratered, and economic anxiety is surging all over. All of which begs the question, is 2025 still my year? Well, during today's show, we're going to answer that important question. But before we get into today's subject, let me introduce my co-host, Tony Shore, whose steadiness I always appreciate during times of financial volatility. Hey, Tony, how we doing, buddy?
Well, slow and steady wins the race.
Yes.
Yeah, that's what my grandfather always told me. But I have to admit, I do my best to always stay calm. The financial news, you look at your phone, you turn on the computer, the TV, look something up on the internet. You're going to hear the sky is falling as usual from
Yes.
the news media, a little of that goes a long way. But that's what they're constantly going to lead with. I have to say, I can still say this week, Albert, that I'm doing better than the market.
Good.
Low bar, but I am doing better than the market. But again, your advice, we were talking before the show, don't panic, right? I mean,
Right,
we've
right.
we've seen much worse times. The
Yes.
market always bounces back, at least it has over the last 100 years, right?
Yep.
Nobody has a crystal ball, but I think we're going to be fine. It's market volatility, and it's weird how just the littlest thing these days causes volatility. I mean,
Right.
the president posts something on social media, the market takes a drop or it goes up.
Right.
Somebody sneezes in China, the market takes a drop or goes up. And I've said that before, but it's so true. I just have to point it out again.
You're absolutely right. People are running on emotions right now, and I guess it's fair to say that everything that's been happening in just over 100 days of the new administration, of course everyone's going to react. But I think with some time, people are going to start understanding that what, it's not as bad as we think. I mean,
Right.
22 we had worse with the market, and 20, obviously, like we said, with COVID. I mean, we've seen worse things than this in the last 5 years twice. And
Right.
so I'm just telling everybody, just relax. And this is why you have a financial plan, right?
Yeah.
So
Yeah,
what
I
we're
mean,
going
as
to do.
of this recording, I mean, yesterday the markets were way down.
Yep.
Today they're up again, and they're headed up right now. You don't know, it is interesting. I mean, we don't know. I think the wisdom said this year. You've said bring an umbrella. You're right.
Yes.
It's going to be,
Yes.
there are going to be some rainy days this year because we had 2 years of just highs, right? And
Just
so,
stellar. Yes.
yeah, yeah.
I mean, we're over 50% in 2 years. Think about that.
So there are going to be corrections,
Yep,
obviously.
yep, yep.
Yeah.
So with that being said, let's dive into a Kiplinger article titled, "Is 2025 a bad year to retire with the stock market in the dumps?" So not exactly rolling out the red carpet for retirees right now in 2025. Markets are sliding, as we said. 401ks are looking a little slimmer. Tariffs are still hanging around. Like that one guest who won't leave the party, Tony. And because why not? Egg prices have jumped nearly 60% over the past year. Who knew omelets would become a luxury item now? Okay.
Right.
And if you were planning to retire this year, well, it's totally normal to feel a little nervous. No one dreams of starting retirement with their investments down and inflation up. And with retirement potentially stretching 20 or 30 years, that's a long runway to think about. Now, Here's what we zoom out though. Whether 2025 is truly a bad year to retire really depends on your personal setup. How much have you saved? Where will you be drawing income from? And what kind of lifestyle are you envisioning for your golden years? Poolside margaritas or low key garden days? Now, a financial pro puts it like this: if you're planning to live off your principal right away, this might be a bumpier start. But if you can delay tapping into those core savings, maybe live off other income sources, then hey, 2025 might still work out just fine. So don't let the headlines make the call for you.
Right.
Your retirement timing isn't just about the markets, it's about your goals, your flexibility, and maybe even your tolerance for $9 eggs, Tony.
Yeah. Yeah. That seems to have a lot of folks up in arms. And the cost of goods, of course, we've seen some inflation go up and it's come back down a bit. But let's start with the potential bad news first.
Okay.
Why might this year, 2025, be a bad year to retire?
Well, let's talk about something that doesn't get nearly enough airtime. And you can make or break your retirement plans, but the dreaded sequence of return risk. Okay. That's what's at stake here and can hurt people. Sounds fancy, right? But here's the simple version. If the market takes a dip right as you're stepping into retirement and you need to start withdrawing money from your investments, you might be pulling from your portfolio at the worst possible time. And then when you sell low to get your income, that money doesn't get a chance to bounce back when the market eventually recovers. Ouch, right?
Right.
Well, now so far in 2025, it's given off. Please proceed with caution vibes. The markets are dipping, and let's be honest, we've been riding pretty good, like you and I have talked about earlier, in the waves that we've had up until now. And
Hmm.
a correction, well, was bound to happen eventually. But the key question is, how flexible are you when it comes to pulling money from your portfolio? Because here's the deal: if you're in a position where you have to sell investments while they're down, let's say 20%, that's what we call a double whammy. Not only are prices down, but you're locking in those losses just to cover expenses. It's like selling your car during a snowstorm because gas is too expensive. It might feel necessary, but it's probably not the best timing. And here's another trap: when people see their portfolios drop, the instinct is to get super conservative and run for the hills, or at least for cash. But going all in on cash during a downturn, well, that's like jumping out of a boat mid-storm. You miss the rebound, and history shows time and time again that rebounds happen, Tony.
Yeah. And if you think back to the Great Depression or even the COVID dip or 2008, the people who stayed the course and
Mhm.
didn't panic, they didn't just recover, they actually came out ahead, didn't they?
Oh, that is right. You're truly
Yeah.
right about that. In fact, those that moved around and got out, they didn't get back until about 2015 to 2017. That's
Right.
5 to 7 years where people who stayed the course were back by 2013 and 14. So it's just a big difference there. And you have to understand, they made the classic investing mistake, and that's selling low and buying high. And
Mhm.
it's the exact opposite, like we've always talked about, of what you're supposed to do. But emotions can be sneaky like that. And that's what's happening, I feel, right now. And if the portfolio doesn't recover because it's sitting in cash, I mean, come on, that could mean
Mhm.
having to go back to work, or let's be real, you probably won't land your old job with the corner office and Friday donut perks. It might be
Right.
more part-time gig work, Tony, or something that just covers the basic, not exactly the dream retirement. So here's a simpler way to think about it. If you could cover your living expenses for, let's just say, the next 2 to 3 years without touching your investments, you're probably in a pretty good spot to retire, even in the rocky market. But if you know you'll need to start selling stocks just to pay the bills, it might be smart then to wait it out a little bit longer. Give the market some breathing room, give yourself some breathing room. And remember, retirement isn't just about timing the market, it's about timing your life, Tony.
Yeah. Yeah, and I think that's huge. So, before we move on, Albert, let's let the listeners know how they can get a financial plan in place, a retirement income plan in place, and if they have any questions, how do they do that?
Yeah, folks, you can visit my website at www.kaizenfinancialgroup.com. That's Kaizen, Kaizen, or call my office at 586-752-7008 and discuss how we can answer your questions and address your concerns about your timeline, your retirement strategy, or any other parts of your financial strategy.
That's right. And it's been a great show so far. During our first segment, you talked about the current financial picture and whether 2025 is still a good year to retire, what you might need to be thinking about.
Yes.
So, how about a dose of good news now? What's the good news out there?
Good. Well, let's stick with that same article. Kiplinger's is 2025 a bad year to retire with the stock market in the dumps? It actually has some good reasons for optimism. So, first, let's be real. Stocks go up, stocks go down. That's just what they do. But if you've been playing the long game, saving consistently, diversifying your investments, and keeping your debt under control, then hey, 2025 might be just fine for retiring. Seriously. Inflation? Well, it's actually behaving for right now. When we look at the past few months' numbers, it's actually been doing pretty good. The consumer price index for February came in at 2.8% year over year, according to their article, which is better than expected. So that's not shabby when we think about the inflation part. Now, tariffs, they're a bit of a wild card, but so far, your morning coffee and grocery bill haven't exploded yet. All right. So before you start packing for the celebratory cruise or digging out your pickleball paddle, the article also urges you to do a little financial post check to make sure you're truly retirement ready, especially if the market throws a tantrum, let's say in your first couple of years out of the workforce.
Yeah. Yeah, and the market has been throwing a tantrum.
Yes, it is.
I like that. So, what kind of information is revealed during one of these pulse checks that you're talking about?
Yes. These poll checks are really, really good, though. And a lot of folks, you guys should really be doing this with your financial service professional. And here are a few key questions to ask yourself when you're doing this. All right. It's kind of like a quiz. Okay. Have you been maxing out your 401k and making catch up contributions? Two, have you teamed up with the financial pro to optimize your tax situation? Is your living setup affordable, stable, and preferably not driving you nuts? And then lastly, maybe most importantly, can you emotionally handle watching your portfolio dip without freaking out? Now, that you're not going to get with a steady paycheck. So, a financial service professional quoted in an article recommends running a few what if scenarios. For example, what happens if your portfolio drops 10% in the first year? Do you still have enough cash on hand to cover your expenses? Or let's say if you start taking withdrawals from your 401k or IRA and the market stays sluggish, are you still going to be okay?
Right. Yeah, and there you go. Are you going to be okay if you're working with a financial services professional like yourself, Albert? I think that answer is going to be yes. And that's another way you can answer some of the vital questions by working with somebody like yourself. And that's going to help you determine whether or not 2025 can be your retirement year or whether it's 2026, whenever you need to have a plan in place and work with somebody like yourself, correct?
That is right, Tony. And I mean, I tell everybody, know your numbers. And the best way is to have a written financial plan, work with that financial service professional. Because here's the thing, retirement isn't a financial finish line, it's the start of the whole new chapter. And whether that's traveling the world or spending more time for grandkids or finally learning how to bake that sourdough without setting off the smoke alarm, well, it should be something you're excited about. Now, if all the signs point to yes, and you've done the work to get here and then done, let's say, don't let the market noise throw you off course. Well, but if you're not feeling confident or if you're already eyeing next year's retirement numbers, there's no shame in hitting the pause button and waiting a little longer. In fact, retirement should feel right, should feel fun, and maybe even a little bit like freedom, Tony.
Sure. Yeah, it should feel like freedom, and that's what this is all about, isn't it? I'm curious though, what does 2025 look like for people? Maybe if they're running a bit behind, they're behind in where they'd like to be
Mhm.
with their retirement savings?
Well, here's the great and very important question, Tony. From another Kiplinger article titled "Late to the Retirement Savings Party: 5 Tips for 2025," has some perspectives for us. The first recommendation is to build your retirement savings with catch-up contributions. What right now is a great time. If your 401k looks a little neglected, it's a great time to show some love while things are down and you're putting more contributions in, dollar cost averaging. I mean, seriously, even small changes can make that big of a difference. Okay. And then in 2025, if you're under 50, you can contribute up to $23,500. So, but even if you can't swing the maximum, at least grab your company's match if they offer one, because that's basically free money. And who says no to free money, right? Now, let's say your company matches 100%, let's say up to 5% of your salary. If you make $70,000 and contribute that 5%, that's $3,500. You'd end up with $7,000 going into your 401k that year. Now, do that consistently and boom, over 10 years with a 7% return, you're looking at more than $100,000. Not too shabby, right? Now,
Right.
if you're 50 or older, take advantage of the catch-up contributions. You can put in up to $31,000 in 2025. And if you're between 60 and 63, that's a super catch-up that bumps it to 34,750. Think of it as turbocharging your nest eggs. And then beyond that, consider adding some extras to your savings mix: IRAs, ETFs, index funds, maybe even an annuity depending on your goals. And hey, before you panic about being behind, check out the average savings by age. Odds are you're
Hmm.
probably doing better than you think, Tony.
Yeah, I know you've told me, Albert, when people come into your office, a lot of them are doing much better than they think they are.
Mhm.
And that's always good. Sometimes it goes the other way where, yeah, you might have to work a year longer than you planned. But figuring it out is the battle. And that's going to get you a long way. You're going to sleep better and you're going to know you have a plan in place that will overcome any market volatility. I think this is really great advice. What's
Yes.
next, though, with this?
All right. Well, let's talk about two powerful ways to boost your retirement game: working a little longer and making your savings automatic. So, again, not exactly revolutionary advice, but hey, it works. We all have that magic number in our heads. I'm retiring at 62 and not a day later. But man, adding just a couple extra working years can do wonders. More time to save, more time for your investments to grow, and yep, more time to pay down any lingering debt. Now, I'm looking at you, credit card from 2019, right? And here's the real MVP move: make your saving automatic. Take yourself out of the decision making loop. If the money leaves your paycheck or bank account before you even see it, you probably won't even miss it. And your future self will be doing a little happy dance. So it's like financial stealth mode. You learn to live on less without even realizing it, and your nest egg quietly fattens up in the background. So, if you're serious about retiring comfortably, and maybe even with some champagne on hand, well, a few extra working years and some autopilot savings could really make all the difference.
Yeah, yeah, it really could. And so this has been a great topic. You need to know, hey, when can I retire? I was thinking about retiring the end of this year. Can I still do it? To get the solid answers you need, you can't just do what your, in-laws did or your brother did or your neighbor or your coworker or your friend. You've got to work with a financial professional who's going to look at your personal picture. Everybody's different, and figure out, okay, this is when you can retire based on your budget and your needs and your goals. And so for our listeners out there and viewers, for them to do that, I know you're offering a no charge, no obligation consultation, right?
Correct, correct. Folks, if you want to know your numbers and have a financial plan put together, if you're concerned about your retirement target and getting emotional, folks, just visit my website, www.kaizenfinancialgroup.com. That's Kaizen, Kaizen, or call my office at 586-752-7008. And we can talk about your retirement timeline, your retirement strategy. And remember, it's our goal to help you prepare for retirement so you can own your retirement.
Yeah, there you go. Well, this has been a great show and a great discussion, Albert. You gave us a lot to think about, and I want to encourage our listeners to pick up the phone, give you a call, or check out your website. Again, that's kaizenfinancialgroup.com. Kaizen is spelled Kaizen, financialgroup.com. And it was a great one. Thank you for listening. Thanks for tuning in. That does it for today's episode of Own Your Retirement with our host, Albert Lalonde.